Hello and welcome to our new video. Today we're going to look at gold mining stocks and naturally the gold price too. And we will discuss to what extent these gold mining stocks appear fundamentally sound, or perhaps some might look rather poor. We'll answer that in this video, and of course the gold price, where is it headed? Will we perhaps see new all-time highs? How does the chart look? I'm quite optimistic that we might still see a very positive surprise in 2026. But before we begin, of course, a quick risk disclaimer. Everything I say is not a buy or sell recommendation, nor is it financial advice, but merely my own opinion. So let's jump straight into the video now and begin, as is customary, with the gold chart that I've prepared for you here. And here we can see the gold price, its development shown in the daily chart. And what we see here is that this level at $5,600 is crucial. And we experienced this incredibly sharp, what you might even call a long squeeze, or perhaps a significant crash correction, to put it in those terms. But the gold price has now recovered quite quickly, in the sense that we have successfully recaptured the moving averages, essentially meaning we have resumed this upward trend. And what's interesting now, of course, and I've also explained in my recent videos time and time again, that the gold price, especially on the monthly chart, is also very overbought. And that is in fact still the RSI. If we take a look at it, it's currently at a value of 92. It's as high as it was in 1973. So it's been a while. This also shows, how bullish the market is, how euphoric the market currently is and its participants. And fundamentally, it's not a bad thing, and also no reason to now doubt that we'll see a crash or the end of the bull market here. Quite the contrary. Such a trend can certainly last a long time. You must, however, keep it in mind. That's the only thing I wanted to say. And what's important right now, or rather this pattern that we're currently observing, for one, I like that we're moving relatively quickly and steeply back up towards the all-time high. That's already a very, very positive sign. And in recent months and quarters, we've repeatedly seen reactions where the gold price shot up sharply. We've had that here too. And then it corrected with a large candle. We saw that here in October 2025. We also saw this in April 2025, and we are currently witnessing it in February 2026 right now in this particular phase. And fundamentally, of course, to continue this upward trend, we absolutely need to get above the $5,600 mark. Then naturally $6,000 comes into view. It's quite possible that we'll reach that, but there's always the risk that in this uptrend we might once again approach that $5,600 mark and potentially form something like a double top here. You simply have to keep your eyes open to see if that's indeed the case. And then it could actually be a significant factor that we might see a longer correction, a more extended sideways phase. However, due to the persistent problems that we are still experiencing in the world, primarily, of course, because of Donald Trump, we naturally also see a bit that the demand for gold is always accordingly or still very high. And consequently, prices can certainly continue to rise. The gold mining stocks are looking very, very good as well. And we can also see this in the latest quarterly figures, which we have recently seen published for the individual gold mining stocks. We will now go through them one by one. The gold mining stocks, and we can actually explain this generally for all of them right now, using Barrick mining as an example, have experienced this pullback that we naturally observed in both gold and silver, and have followed suit accordingly. However, in contrast to gold mining stocks haven't corrected as significantly. As you can see, we've managed to hold the 20-week moving average here, and just like gold, we've relatively quickly broken out upwards again from here and have successfully continued the upward trend. This naturally has its reasons, and these reasons can be found in the fundamental key figures, because if we take a look at the fundamental key figures over a long timeline, then we see that Barrick mining has net margins as good as they haven't been in a very, very long time, and they are also continuously rising. And should the gold price remain at around $5,000, then this profitability should also continue accordingly. So we're now seeing an expansion of margins, which was to be expected with gold and the rising gold price. And above all, we're also seeing exploding free cash flows. And I believe the word exploding is truly appropriate here, because we're also hitting records when it comes to that. Record-breaking cash flows, the kind that we haven't really witnessed in the last, I would say, 10 years. And that, of course, also makes it possible, especially when we talk about dividends, for dividend increases and special dividends, which we should also keep in mind. That, of course, paves the way for management to prioritize shareholder value again accordingly. And also, of course, what might be interesting in this sector, and please write in the comments which junior minor gold stock you find most interesting, considering that acquisitions could be initiated here, because if these big players in the gold mining sector have a lot of cash, they will naturally use that cash to expand their mining portfolio. Well, the question now, of course, also depends on the price of gold. Should the gold price not manage to reach a new all-time high, it's quite possible that we'll see a period of consolidation here first. However, I also don't believe that the downside risk for gold mining stocks is particularly high right now, precisely because they have demonstrated this relative strength in the past, which is, of course, based on their solid fundamental figures. Of course, you also need to look a bit at the valuation. And if we take a look at the PE ratio here, then we see that given this high profitability, Barrick's PE of 16 or almost 17 is not very high, and therefore still has room for the stock to rise further valuation-wise. This means that even with a stagnant gold price, meaning a sideways movement in the gold price, we can see a new all-time high in gold mining stocks. The valuations are moderate. If we look at the price to sales ratio, then we do see elevated values. Yes, of course, a price to sales ratio of 5. We last had that with Barrick in 2020. And normally Barrick is considerably more affordable. However, due to the persistently high prices, valuations will naturally tend to decrease next year and into the future, because these are always based on year-over-year comparisons. This means that, in effect, the shares are not nearly as expensive as they might initially appear at first glance. Yes, Barrick is definitely looking very, very good. We're seeing a bit of a rivalry between Barrick and Newmont. Newmont is what we'll look at next. In principle, the stock, or rather the chart, looks exactly the same. Here too, we have this very, very good pattern of relative strength where we are maintaining this steep uptrend, and it truly wouldn't surprise me if we see further rising gold prices for Newmont. We are still examining the margins, because that is what's truly interesting. The gross margin is significantly increasing here, moving towards 60%. That is absolutely excellent in this sector. Yeah, the valuation is accordingly for the price to sales ratio pretty much exactly the same. There are no big differences except for one stock that's coming next. This one genuinely still has a lot of upside potential. Naturally, there are reasons for this, but the stock itself is quite interesting. Similar to Newmont, its price to earnings ratio is also elevated right now, but it's not extremely high, where I would say, wow, Newmont is simply far too expensive for me at its current level. What is the most important thing we actually need to look at now? And those are the all-in sustaining costs, meaning the production costs for the gold mining stock. So I brought you an overview here showing what the current costs are like, and then you'll see with the gold price at around $5,000, roughly speaking, and if that price rises, it becomes even more lucrative, of course, with production costs significantly below $2,000. And that's precisely why we're naturally seeing these very high margins. Well, the margins, or rather the production costs for most of the gold mining stocks that we're currently looking at today are very, very similar. There are only marginal differences of a few $100s. Naturally, Agnico and Newmont stand out with very favorable all-in sustaining costs, while on the other hand, Barrick has relatively expensive ones. But now, considering a gold price of $5,000 is practically negligible whether our production costs are $200 or $300 higher or not. And that's precisely the very reason why gold mining stocks are performing so incredibly well. They are genuinely earning an immense amount of money at their current operational level. So let's move on to the next stock. This is actually a very, very exciting stock that I once had in my portfolio, but I actually need to buy back again now because, in my opinion, it still has the potential to slightly outperform the market. B2Gold had some problems, which I mentioned in the last video. You can feel free to research that regarding the mines in Mali, etc. I believe the Goose project in Canada is finally getting started now. There were also delays, and I believe that B2Gold's shares, or rather its stock, then certainly has the potential to outperform the market, because the valuation here, its price to sales ratio, is only half as expensive as other stocks. What this implies is that if the issues currently weighing down the stock are no longer a significant concern, then the share price can indeed ascend to these higher valuation levels. and that represents a price potential of 60%, which I still definitely see this year. It looks similar with the margins, at least for the gross margin, we're already above 50%. That's top. The free cash flow is finally starting to turn positive as well. I think that will be consistently enduring and sustainable. The net profit margin is now finally in positive territory over several quarters, though still slightly fluctuating and naturally much lower than its competitors, which was due to past issues. But here too, they will turn a corner, and it's only a matter of time until B2Gold achieves profitability, just like the other stocks. That's why I see significant upside potential here. And the price target for B2Gold, as I mentioned, is 60%, I'm telling you. And if we project this a little, what that translates to in terms of share price figures, then I also see the B2Gold stock reaching a good $10 by 2026. And that doesn't quite align with analyst estimates. Yes, they are a bit more pessimistic, but I think that B2Gold definitely has quite a bit of surprise potential. So let's move on to the next stock. And this is truly a high flyer stock, soaring as high as an eagle. An Agnico Eagle. This stock truly knows no bounds, and it's always been comparatively more expensive than other stocks, and it still is right now. We currently have a price to sales ratio of 10. Yes, the stock hasn't had that in a very, very long time, but that's also due to its extreme profitability, and not just recently, but consistently positive for many, many quarters. The net profit margin here is over 40%. That is already really, really good. The free cash flows were $1.3 billion per quarter most recently. So not just the last one, but essentially the last 3 quarters. And they are now building up a really nice cash cushion. So the net debt is currently at minus $2.5 billion. That's quite substantial. And accordingly, that can certainly be a topic for potential acquisitions, etc., which I had already mentioned. Agnico, clearly this stock generates a significant amount of money and is therefore, I'd say, quite popular among investors. And its PE ratio is naturally a bit higher due to the company's strong fundamental situation. This means this is essentially the opposite of B2Gold. What we're seeing here, we're observing a valuation premium because this company is fundamentally in such a strong financial position, which is precisely what we don't have with B2Gold. There we find the complete opposite. There are issues. There's a significant valuation discount. That's why it's actually quite a good comparison here to see a little bit of the opposite. Yes, Agnico, can you still buy Agnico? I mean, sure, as long as the gold price remains so consistently high, and as long as we don't see any longer more significant correction in gold, which currently doesn't appear to be the case, the stock certainly has the potential to continue its upward trend. But everyone has to decide that for themselves. Of course, this is not investment advice. Whether I buy a stock that's at an all-time high or perhaps one that still has catch-up potential. As I said, everyone has to decide that for themselves. But an uptrend that's intact can also continue like this for quite some time. So let's take a look at the next good stock. That's Kinross Gold, and its fundamental metrics are also excellent. Net profit margin over 40%, 45%, almost 250% gross margin. Yes, that's essentially quite similar to, again, what we see with the other gold mining stocks. Also, the free cash flows, not just in the last 2 quarters or so, but have been consistently strong for quite some time now. So truly very, very rosy times. And whoever anticipated this and got in early here, they could now multiply their investment. However, one must not forget with commodity stocks that it's a cyclical business. A difficult word to say, and that there will also be times coming again that are not so good, especially when gold starts to move sideways for a little while. We have always seen this in the past, that gold can sometimes do nothing at all for several years, quite the contrary, in fact, and those will then indeed be very lean times for the gold mining stocks. That's not the case right now. As I said, the chart already looks truly dizzyingly high and also very, very steep. But as I've mentioned, we're currently in a bull market and it remains intact for now. Should anything change, we will, of course, discuss it right here on this channel. Let's also take a moment to look at Endeavour Mining. Yes, Endeavour Mining is also somewhat conservative in terms of its valuation, although it has already broken out with a price to sales ratio of just under 4. The profitability still leaves a little something to be desired, but I believe that with continuously high gold prices, one can certainly benefit quite well from this. The free cash flows already show it a bit, even though we are seeing a small market here. Yes, compared to Kinross, we don't have rising free cash flows here, but rather a small dip or not necessarily a significant drop in free cash flow. As for the reasons, we'll have to look more closely into the company, into its balance sheets. But that is already significant if we now suddenly in one quarter have $380 million in free cash flow, and in the next quarter just 100, and then also only 160. It is already significant. Well, we'll have to keep an eye on whether the stock might not eventually be negatively impacted by this. So that's all from my side. I hope you enjoyed it. Feel free to leave a comment and a thumbs up if you liked it, as I said, and subscribe so you don't miss anything. And then in the next videos, we'll take a look at silver. I've been wanting to cover uranium again for quite some time now. There are also some pretty exciting developments concerning the stocks, very diverse developments. It looks really interesting. And therefore, I would be very happy if you could join us. Until next time.
I hope you have great success and wish you all the best, and bye for now.